Hey, what is up guys? Welcome back to ProTraderPath. I'm back with another video, and today's video is about the market analysis. And before I do my analysis or share my analysis with you guys, as you all know that so far I haven't uploaded a single market analysis video on my channel. The reason behind that is I don't want you guys to get influenced or affected by my analysis when you already have done something for yourself, because before you actually sit on trading you must have some idea which direction you are looking forward to trade, or which direction you're thinking about the market is going and why it's going to that direction. And if my analysis is not aligning with your own, in that case please ignore mine and stick with your own. And if for any reason your analysis is not working in your favor, or your analysis is getting or proving wrong for a certain period of time, only then you can maybe go with my analysis, and if only it's doing the thing that I'm actually saying over here. So yeah, I mean, please keep that in mind, that if you have already done your analysis, please don't let me influence or confluence your analysis. Okay, that's been said, I was actually thinking about posting some screenshot on my Discord channel. However, the fact that I'm about to share here, or the fact that market analysis requires a lot of screenshots, okay, it's like from higher to the lower time frame, it requires pretty good amount of screenshot, and it might get confusing to some of the people. So for that reason I actually choose to go with a video. And another thing is, if you're with me for a while now, you know that I don't start my analysis from DXY. Instead, I start my analysis with the market I'm trading. And once I'm done with the analysis, I go to DXY to confirm that my analysis on the market that I'm trading is supporting or suggesting that idea or not. The reason behind that is futures market are not 100% inversely correlated with dollar index. Okay, maybe it may sound crazy to you guys, but why I'm saying this is because the DXY and the Euro USD or GBP USD, these markets are perfectly inversely correlated. But the futures market like NQ or ES or Dow Jones, they are not actually, they don't follow it all the time. It's like sometimes you will see the market are moving the same direction, okay, and maybe most of the time you'll see something like that happening. So for that reason, I don't start my analysis with DXY. However, I use DXY as a reference, that if my analysis, what I'm doing here, if there is anything that's actually suggesting that okay, it's actually correct or something, for that specific reference I use DXY after I'm done with the analysis on this market specifically. So without any further ado, let's start. And if you are willing to join my Discord, I will put a link in the description. So yeah, that's been said, let's start. So on the right I have a weekly chart, on the left I have a daily chart. The weekly chart, let's start from the weekly. The reason I'm starting from weekly is because on the monthly chart, yes, there are some funny things to show you guys, but what you are seeing over here, there is literally nothing to talk about over here. Okay, so it's been sideways consolidation, and literally there is no fair value gap, nothing over here. So like I don't think I need the monthly chart to actually do the analysis anyway. So let's start with the weekly one. First thing is, as I have already said so many times, that if there is a liquidity sitting right above or below a fair value gap, that is a high probability fair value gap. Why I'm saying this is because, as you can see, this specific high, it didn't trade to the fair value. So market, after the retracement, it went higher, took the liquidity, and as you can see, the way it took the liquidity, it clear indication that it's a sweep of liquidity. It's not willing to continue higher, at least for now. Okay, so for that reason, let's keep an eye on this fair value. Now from weekly chart, we have a small fair value gap as well available on the bullish side. However, let's first talk about the bearish fair value. As you can see from the weekly breakaway gap, market traded the consequent encouragement. It kept some portion unfilled and it literally closed way below the weekly fair value gap. Now why I'm showing this is because when market was going higher, we had a second fair value gap here that market literally disrespected, and like disrespected here when market was disrespected here, and when market was coming lower for a retracement, it again disrespected that fair value and went through that fair value one more time. So it showed no respect to this fair value gap, and there is a reason behind that, which is the premium and discount. If you draw a fib from the high to low, you will see that this fair value is sitting in your discount, and if the market is bearish, it should not respect your discount PD area. Instead, it should first aim for your premium PD area. Now a lot of people might have confusion or issues with the premium discount, but why I'm showing it is because when you draw your OTZ or optimal trading zone or optimal trade entry, look, that 7-9 level is overlapping the weekly fair values midpoint. Not just that, from the 6-2 until the 7-9 level, as you can see, there is no other fair value but only this one, and market literally traded that fair value and then started to show some rejection from there. Now that's why it's your extreme premium fair value or PD array, premium discount array. On the left we had a small inversion fair value as well that market literally traded, or this can be your balance price range. So buy side imbalance, sell side inefficiency, the same area overlaps with a sell side imbalance, buy side inefficiency. Market traded the low of it, then it rejected from there. However you want to keep it, you can keep it simple with that simple fair value gap as well. Now that's been said, I'm marking this lowest down close body close candle the midpoint of it. There is a reason behind that, which is, again, that's the midpoint of that lowest down close body close candle, which I have marked as weekly bullish order block mean threshold. Now why I'm marking mean threshold and not the order block high? Because the other time frame, which is, if you look on the left, with that weekly order block mean threshold, I have a daily breakaway gap. Now why I'm looking on the daily breakaway gap instead, not anything else over here. When market was going higher, okay, again the same thing, it created one fair value here, another fair value gap here, but after trading this fair value, market went so far for a long time, literally like after this candle 1 2 3 4 5 6 and this 7 days or for a week, market didn't create a single bullish fair value gap. So the only PD array I'm seeing over here, or premium discount array, is this fair value. And again, from the low to the high, this is your overlapping, and if you draw the OTZ, that's your OTZ. Okay, so that's another reason I'm expecting market to come here, because I'm not seeing any reason for the market to stop anywhere here. Yes, for some people maybe the order block is here, but I'm seeing this may have a small reaction on the coming week or weeks. However, I'm expecting market to trade here, okay, on this fair value. Now why I'm expecting this? Of course there has to be something to suggest me why I'm expecting a certain thing. Here is why I'm expecting. So let me put the daily on the right, and on left I will put something else. So on the right side, let me bring the daily over here, and I hope the chart is clean. Yep. So the daily chart is on my right, and on the left I'm going for the 4 hours fair value, 4 hours chart. Why 4 hours chart? Let me come step by step. On the daily, you see the highest up close candle that traded that weekly breakaway gap or the daily breakaway gap when market was trading there. Okay, the very next day or next candle, it closed below the previous candle. Now if you are with me, I have streamed literally 5 days ago. The stream title is how to find CISD and observe the price action. Okay, This change in state of delivery, CISD, stands for change in state of delivery. If you go to that specific live stream, at the very beginning of the stream, I have explained, like, you don't have to watch the whole 3 hours stream. Within first maybe 10 to 15 minutes, you will have all the information regarding the change in state of delivery if you missed the stream. However, I will again try to explain a small thing over here, or quickly explain the fact, which is after the liquidity raid, or after, see this high on the daily, okay, market has cleared those relative equal highs, traded the breakaway gap, and then the last highest up close body close candle, market has closed below the opening price of that. This is your change in state of delivery. Now, how you can confirm your change in state of delivery? When market was trading below or closing below on the daily, on the 4 hours, like when there is a change in state, a immediate lower time frame of the higher time frame, for in this case your daily is your higher time frame and 4 hour is your immediate lower time frame. So when on the daily on Friday market was closing below that specific candle, on 4 hours time frame, we can see market created a fair value gap over there. This is a confirmation that yes, market is actually changing its direction. Now, how we can be more sure about that specific thing? On the 4 hours chart, you can see there are 1 fair value gaps, 2 fair value gaps. From this low until that high, I'm seeing at least 2 fair value gaps that market has already disrespected. It didn't respect any of those fair value gaps, right? At the same time, we can see how it's respecting the bearish fair value gap. So change in state on the daily and lower time frame is showing me the confirmation that okay, it's disrespecting bullish PDRS and it's respecting the bearish PDRS. Okay, now that's been said, I have to spend a lot of time on the 4 hours chart. Why? Here is the thing. Remember the daily breakaway gap and that weekly order block mean threshold. This overlapping area, if you look on the left, I have this breakaway gap and I have this fair value gap. Why I'm marking this as a breakaway and this as a fair value? Yes, market previously traded it, left some portion unfilled, went higher or broke above that swing high with new fair value gaps. So it's this one is also a this blue one. Let me actually put the daily fair value on side, just keeping it like this way so that you guys can understand where it is overlapping. So this blue one is your breakaway gap too. Okay, now why I'm saying this? As long as in a fair value gap you have portion unfilled, it's acting as a breakaway gap, and if you look properly, it's actually retracing or reversing from the upper quadrant or around the 25%. See, like exact 25% tap, and then market started going higher with those fair value gaps. So this is a very high probability fair value gap on that specific moment, especially when this 4 hour candle rejected from there and the very next 4 hour candle expanded like this. You could use that fair value gap to look for your entries, and it's a very good sign. Anyway, I'm not talking about how you can enter or how you can look for your entries, but I'm just showing you because it's important. Now, if you look after that specific move, market consolidated, created relative equal lows over here and some relative equal highs over here that market later on took. Now, why I'm showing it again? Here, as you can see, within, let me remove them so you know I have a daily bag over here and the weekly mean threshold. See over here, whenever market was taking the buy side, it was failing to close above. At the same time, whenever market was coming lower, all the bodies were sitting especially around this area. Okay, like it was literally consolidating, or the price was literally sideways price action like this. Okay, so this consolidation left these relative equal lows over here, which is your sell side liquidity. Okay, why I'm showing this sell side liquidity? Let's project. If you are with me and if you have watched my market maker model video, um, this is that example. So what market did was, this is your first stage of accumulation. After the accumulation, this is your manipulation. Market retraced into fair value gaps. These are your reaccumulations, and this is your final stage of the delivery. Now why I'm showing it is because if you project your fib from the lowest body to the highest body towards the buy side, okay, let me remove this fair value as well just to keep the chart clean. Okay, you know what I'm showing over here. Let me clear few more lines so that you guys can understand properly what I'm actually trying to show. Again, from the lowest body to the highest body, this is your fib one of your fib projection. That's your 4.5 standard. That's your -4 standard. Okay, at the same time, since it's relative equal lows, from the lowest low of that range to the highest low, why I'm marking this as the highest low, until this far nobody was closing above when it closed on this move. So I'm not marking that, I'm marking within that range. Okay, so the range can be like this, because after this it started going higher. However, if you want to mark that high, you can mark that high as well, this high. Okay, see that overlap, market traded that overlap, traded that -4.5. Now above your projection or projected terminus, if there is a big figure, market can go 30 to 50 handle, which is in this case the projection was, see like how it's overlapping. Let me actually make another projection towards the left side so that you guys can understand. With that -4 and that -1.5, see how it's exact overlap. When it was exactly overlapping, market can go 30 to 50 handle if there is a big figure. Now look on your price. What is the price? It's 20,456.50. So what do I have around close proximate area? I had 20,500 level, which is a big figure or a round figure. At the same time, if you look on your daily, okay, like the same, you're looking into the projection, but just looking on your daily, this is that overlapping range or area. On the left, exactly that area, you had your bearish fair value gap or the breakaway gap on the daily chart, okay, which is this one that I removed, but I hope you guys are following with me. So from there, okay, like it has reached to the projected terminus, and on my stream you will see, especially on the first day stream and Friday stream, you will see I had a projected terminus marked over here. So if you were there, you know already, and I had projected terminus marked on the lower side as well, like terminus 1 and 2. One was hit yesterday, sorry, on Friday, and the terminus 2 I'm gonna show you right now. So that's the buy side projection done. Now once market reached to my projected terminus, what I'm expecting is market is coming for these sell sides. I'm not marking anything else. Yes, there will be, it's not gonna like fall straight to that area. It's gonna come lower, it's gonna retrace, so it's gonna create multiple like these. There will be some resistance over here. Once it takes a liquidity, it will retrace back into that distribution block, these consecutive down close candles, or if you mark the whole area, you will find a huge range of your consecutive down close candles. So that range, if on a 4-hour chart, if you find any fair value gap, I am expecting that fair value gap will be a very high probability. Now again, I have showed you the upper projection. Now the same thing, okay, when you're doing your upper side ups or buy side, you can do that way. And now when you're doing your first focus or target should be this one, the sell side or initial consolidation low is your first target. Now below your first target or below the initial consolidation, if you project this way from the body, highest body to lowest body towards the downside, from the highest wick to the lowest wick towards the downside. Now let's look here. That negative 1 is 19,207.75 and that negative 2.5 is 19,220.25. So this is a very close proximate alignment with that weekly order block mean threshold. At the same time, you have your 4 hours breakaway gap sitting right there, okay, overlapping, and that's also 19,200 range, okay. Like if you see, the midpoint is literally overlapping with that 19,207.75. Now another thing is, don't forget your daily breakaway gap. So how many confluences you have? Overlapping PD array, 3, like all the time frames have that specific area as your overlapping PD array. So that is a very high probability area. So if market can come there, it's a very high probability. And that's why, since I have the change in state of delivery, what I'm expecting now is market can literally trade back. See that daily order block mean threshold is literally at the level of that 4 hours bag or breakaway gap, and 4 hours midpoint was literally rejecting the price. So this time I'm expecting, if market is willing to, like on Monday, it may accumulate a little, it go towards the upside better, if not, doesn't matter. So Monday I'm mostly expecting an accumulation. And also don't forget that this week we will have non-farm payroll or NFP. So everything or every trade you are taking until I think Tuesday, if you are trading, it's good, but Wednesday we have a non-farm payroll and Friday we have a non-farm payroll. Especially from Wednesday until Friday PM session, you should not be looking into trades. So this week even better if you can avoid, and that will give you more clear direction that where market is going. Now why I'm saying this is because if you are not experienced with the market condition during those days, especially ICT also suggested not to, look for entries or anything. Anyway, so what I'm expecting, once a change in a state of delivery happens, usually the very next candle, so since it's a daily change in state, usually the very next candle tends to aim for that specific order block range. The change in state, that candle is also considered as your order block. So I'm expecting market to literally retest or revisit this on Monday. Maybe on Tuesday market can go little higher. Okay, now let me check the day hourly chart, how it looks. So hourly, I'm not seeing any fair value gap around this range or this range. So yes, market can revisit that mean threshold as well. Or if market is overzealous on Tuesday, market can go grab this liquidity and create a wick, because it's a daily mean threshold. Okay, this is a daily mean threshold. Market can literally, on the lower time frame, it can go above that, but on the daily you want to see that nobody is actually closing above that. Okay, even better if it doesn't go for this fair value, instead it can trade here, the low of that breakaway gap, and then continues its move again. Anyway, so I hope you are getting my point. So the reason behind my bearishness, or I'm becoming bearish, is because usually on this specific month, the coming month, which is October, I have checked until 2018 on the monthly candle, and mostly September, October, November, between these 3 months, it's the seasonal tendency is more likely bearish, especially October. From 2008 until 2024 or 2023, there are near about 15 candles. Okay, 15 October monthly candles, and out of 15, if I'm not mistaken, I have seen nearly 11 of them are long bearish down close candle. What do I mean by long bearish? Is pretty big size down close candle on October, especially on October. Okay, so if you have time, you can go through your monthly chart and see like how far it has actually done the similar thing. So yeah, like the data is in front of you, you can use that confluence or influence as well. So if that is the case, this sell side is not a impossible side. Okay, just keeping that in mind. And since it's overlapping, I'm expecting market to come at least that 19,207.75 level at, or 19,200 level. Okay, so yeah, I hope you got the point, which is I'm literally expecting market to go until this far and trade the daily breakaway gap, especially that midpoint where I have the 4 hours breakaway gap as well, sitting or overlapping the daily breakaway gaps midpoint over here. At the same time, this sell side liquidity is a must. Okay, so project maybe from 4 hour, from hourly, that's up to you. But yeah, I mean, this is that accumulation, this is those manipulation, this is those reaccumulation happening, and then finally market reached to the projected terminus and gave you the change in state of delivery on the daily, so far on the daily. Now weekly, I'm expecting that since it's non-farm payroll, maybe using the NFP, market will give you a bigger displacement towards the downside. But before that, I'm expecting another accumulation, manipulation higher, then the distribution lower. As you can see here, it's also the sideways price action on the hourly and even the 4 hours, like the bodies. Okay, so let's see how it goes. I'm looking forward to that. So Monday, Tuesday, I'm expecting market to at least revisit the daily change in state of delivery, especially on Monday, at least the low of the daily change in state of delivery. And on Tuesday, maybe it can come back to the low of that 4 hours breakaway gap. From Wednesday until next Friday, I'm expecting the lower run, and since Friday is the end of the week, market can easily retrace back or give a bigger pullback towards the upside. But it's better if I can find more structures by the end of this NFP. Okay, so I hope that was insightful. I don't know if you got my point or not, or I was able to give you any clear direction or indication like how I'm looking for it. Now, okay, another thing, why I'm exactly looking forward to the retracement to this level or this level first. Now here comes the DXY. Now DXY, I don't really need to go too far, just from the weekly. Okay, just from the weekly, look how it's looking. From that huge bearish fair value or breakaway gap, market has, see, it rejected from the 25% of that fair value. I can see by eyes, I didn't mark it or what it calls, like I didn't measure it. So yeah, like the lower 25%, very close to that, but it never reached there. However, lower quadrant, then the low. Now when it is going lower, you can see multiple bearish fair value is getting formed, and it's respecting that here as well. Why I'm marking this is because we have this low sitting right above this fair value gap. Okay, so I'm expecting, and if you don't know, a long ago, like when almost a year ago, it's like 2023, yeah, so almost a year ago or more than that, we saw ICT was talking about this. Like, see how it's going from very close to that fair value, but it never traded there. So I'm expecting DXY to actually trade this weekly fair value gap below those low that is not trading the fair value. It has already cleared this liquidity. It is showing that bearishness. So from this, we can expect bit higher move on the DXY. During that higher move, this market can follow the DXY and fall, okay, like inversely correlated. So for that reason, okay, so again this scenario and NQ, this scenario, okay, where this high didn't trade that fair value, market traded there, now it's showing the rejection or reaction from that. So I'm expecting the same thing will be happening when market will trade to this fair value below those low and then reject from there, maybe towards the upside, since we have on DXY so many relative equal highs sitting right there, and since the red cut is happening, now is the time that market after trading there will shift his bias towards the upside, and during those days you will see how this one and this one follows each other, okay, because red cut is something that not a lot of people have experienced in their life. So in that case, no one have enough experience to say that yes, if the red cut happen, this market will fall, that market will go higher, or this or that, because red cut, again, it's good for currency. At the same time, it's good for people's financial condition. If you don't have to pay a lot of interest on your loans, you can invest more money on the market. So for that reason, both market can go towards the same direction. No problem with that. Yeah, so it's yet to see. Let's see how it works. So yeah, I hope you got my point, and please keep this in mind. Then don't let my analysis do manipulate or confluence your analysis. If you don't agree with me, let me know in the comments, so that if there is anything that I'm missing, I can literally correct myself using your analysis as well. It's all about helping each other. It's a very solo journey. As long as you have the knowledge or you know what you are doing, you will be successful. So don't worry if I'm wrong. I'm okay, and I know how to mark myself wrong and correct it as well. So please stick with your own analysis. If proven wrong and mine is going towards the right direction, only then you can follow my analysis. So yeah, until next time, take a very good care of yourself, your health, and your loved one. Bye bye.